Just over 2 weeks ago, Silicon Valley Bank went bust and it was taken over by US regulators. It, of course, threatened another global banking crisis. Well, overnight, SVB was bought by the First Citizens Bank. It assumed Silicon Valley's $110 billion worth of assets, $56 billion of deposits, a loan portfolio of $72 billion. Now, it'll be funded by the US government, and all of that could end up costing the bank just $500 million. So it's no wonder that First Citizens' share price overnight jumped more than 50% on the news. Fox News reports.
Customers of troubled Silicon Valley Bank have a new place for their money, First Citizens Bank. All 17 branches of SVB opening Monday under the name of the Raleigh, North Carolina-based institution after it acquired the collapsed bank.
Too big to fail has become too small to succeed.
First Citizens bought the loans of SVB for the discounted rate of $72 billion. This comes just weeks after the tech industry-focused financial institution became the second largest bank collapse in U.S. history, sending shockwaves across the industry worldwide.
This kind of flow is a good temporary solution, but look, I think this slows the economy.
The acquisition is another step in reassuring investors at a time of shaken confidence in banks. This follows the FDIC trying to prevent a bigger banking crisis by guaranteeing depositors access to all their money at SVB, as well as failed Signature Bank, despite the $250,000 federally insured limit. The initial market reaction Monday was favorable. Still, some experts are concerned there's a rocky road ahead for the banking industry.
I don't believe we're going to have bank collapses like people fear, but banks are going to tighten lending, they're going to pull in liquidity, and that is going to cut off the lifeline to a lot of businesses.
Lawmakers are expected to grill executives from both Silicon Valley Bank and collapsed Signature Bank as they testify before both chambers of Congress Tuesday and Wednesday.